For over 5,000 years, we have assigned value to gold. And throughout the past 5,000 years, individuals are willing to pay more and more for gold than previous generations did. And that's happened over the past 5,000 years, which really goes to show you that certain assets are seen as more and more valuable as time goes on. Now, in the stock market, there are certain companies that are as good as gold. But the difference is there's certain special companies that in your lifetime are not only going to produce you one gold bar, but they're going to produce you a multitude of those gold bars. And so think of it like this. You go to buy a gold bar. You're 30 years old, right? The most that gold bar will ever be in your lifetime is what the next buyer is willing to pay. Now, in the stock market, there's certain companies that when you buy into it, it's like buying a gold bar for your lifetime. But the difference is these companies produce you another gold bar, another gold bar, another gold bar. They have these gold bar babies, I call them, where they keep producing new great business lines that are as good as gold. And they produce billions of dollars, tens of billions of dollars of new income streams that you never even saw coming when you first bought into that gold bar. It's absolutely extraordinary. So in today's video, we're going to go over 7 stocks that every investor must own. These are what I call golden companies, and they're going to produce you a lot of golden babies over the coming years, okay? I hope you guys really enjoy this video here today. I got 2 questions for you before we get into this video. 2 questions. Are you subscribed to the channel? If you're not, you might want to consider subscribing. 2, do you smash the like button? If you do, I appreciate you. Let's get into this. Here's the 7 stocks you must own, every investor must own. These are golden companies. First one, Meta Platforms. This is a must-own stock for all investors out there. It's been a must-own stock basically since the company went public, and it remains a must-own stock today in 2024. Here's the deal, okay? Facebook started out as just one gold bar. It was an incredible business called Facebook, one of the most powerful, certainly, platforms that was ever built in human history, and it's done tremendous. And that was a gold bar. And then they bought Instagram, which was the next gold bar. It had a baby. It adopted a baby. Then you know what happened? It adopted another game-changing baby called WhatsApp with over 1 billion users. Instagram nowadays, over 1 billion users. WhatsApp nowadays, over 1 billion users. And absolutely, they own 3 of the most powerful advertising platforms in the entire world. Absolutely extraordinary. Then from WhatsApp, they built out Facebook Messenger. They built out Instagram DMs. So now we're talking about much of the world's communication goes through Facebook Messenger, Instagram DMs. Incredible. They've now built Threads, which is an X competitor. They also are in the metaverse, right? They're the #1 player in that market. They have Meta glasses, which are incredibly popular. I actually have a pair as well, made by Ray-Ban. They have their Meta Llama platform, which Llama could be what is, people look at AWS as today. Llama could become that over this next 10, 20 years. And then they also have all their AI capabilities built into this. So from one gold bar that started out as Facebook, they now have countless golden babies that are producing the company immense amounts of money, right? Now, the key thing you got to understand about Meta is the more people that use it means more businesses need to use it. More businesses use it, more ads to be run. More ads that are run, ad prices are going to go up and up and up. And that makes the company more and more money over time, which is absolutely incredible. Now, when we think about the greatest businesses ever created in the history of mankind, I would think Meta needs to be up there in that Mount Rushmore conversation. When you look at the gross margins of this company, when you look at the net margins of this company, they're absolutely historically amazing. It's one of the best business models you can ever imagine. When we're talking about you have billions upon billions of users using your products, you have immense amount of data that then that data can be used to go ahead and sell advertisements. It is like, of the business models, it's definitely a holy grail business model out there. Now, we got to take it back to when this company went IPO, because you got to understand the history of this company as a public company and how misunderstood it was, how misunderstood it still is to this day, and how much real upside is ahead in this stock over the coming years. You got to understand, when this company went public back in 2012, went public at $38, and then very shortly after the stock crashed, 50+%, all the way down to $18 very shortly after. Now, the questions people were asking at that time, how are they going to make money? I don't get it. How's this company going to make money? Now we look back and we're like, what a silly thing. But this was, if you paid attention to what people were saying about Meta back in those days, everybody's like, how are they going to make money from this stuff? Okay, big deal. They have a bunch of people using their product. Like, it's a free product. What are they going to do? Charge for it someday? Like, how are they going to make money from this, right? People were saying it might be the next MySpace because Facebook really helped eliminate MySpace. So people were like, well, maybe it's the next MySpace. And we heard that so many times over the past 10, 15 years. It never came true, right? It never was the next MySpace. Third thing is, they said, this has got a young college dropout as a CEO. I don't know about this. You think this company is going to become a giant in the world with this college dropout kid running the show here? I don't know, man. He's in his 20s. Like, what are we talking about here? That was said at that time. And then people were also worried. It's so silly to talk about these things nowadays because we look back and it's just like, this is so silly. But people were very worried about Farmville spend when this company went public. So Farmville had been a very hot game, and people were spending a lot of money on this game called Farmville inside Facebook, and Facebook was making money off of that. But there was seen as like a big slowdown in the Farmville game, and so people were very concerned about that. They were also very concerned about share lockup coming, right? These are all things we look back now and we're just like, oh my gosh, like, can you believe people? But this is what happened with Meta stock, and that's why that stock crashed 50+% after it went IPO, one of the most historic, famous drops in the market in history, just to be quite frank. Now, the great news is buyers today, right? Because it's easy to look at the stock and say, oh, it's been such a great stock the past 10 years. It's been such a great stock since after the IPO. It's been such a great stock the past year, the past 2 years. So easy to say, well, I missed the opportunity on this stock, right? The truth is, buyers today are not paying a high price for the stock. This stock's trading far too cheap, given its growth rates in revenue and margins, and the growth rates in net income. This is not a high price to pay for this stock. We're at a forward P of 25. Keep in mind, analysts have been continually wrong in regards to analysts, too low with their estimates. So there's a good probability Meta will come in and beat analyst expectations over this next year. So the forward P is actually probably a lot lower than what it says here. And so buyers are not paying a high price today. You're still paying a cheap price for Meta compared to what you'll be paying 3 years from now, 5 years from now, 7 years from now in regards to the stock. Now here recently, if we go to 1000X and we look at the financials, it's been a very exciting acceleration story in regards to the stock. If we look at revenue last year, 15.7% up. This year, looking at 20% plus. Gross profit last year, 17% up. If we look at net income last year, 68% up. This year, we should be looking at, it's a question of where are we at in regards to Meta's net income this year? Are we pushing closer to $60 billion? That's the real question in regards to this one. Diluted EPS will be well over $20 likely this year. And then next year, we could be looking at $24, $25, maybe even $26 of EPS, with net income far eclipsing $60 billion next year. So Meta's financials are all headed in the right direction. And when you compound that with one of the greatest balance sheets in the entire world, you're compounding a company here with, hardly any debt. We're talking about a company that's cash loaded to the sky. I mean, what a stock in such a great position. So in terms of me, it's no surprise that this is a huge position for me. It's a position that's around $900,000 right now. I believe we're going to go to $1 million plus on this particular stock. And I have no ambition to sell any of these 1,700 shares anytime soon because there's nothing incentivizing me to sell those shares. The valuation's too low on the stock when you look at forward P and 2-year forward Ps and trailing 12-month Ps, right? If we look at the margin profile of this company gets better, the profitability profile is getting better, right? We got a company that's actually utilizing AI to help their business accelerate in a meaningful way. If you're an advertiser, it's the number one place you got to advertise. You talk to anybody that runs any business, small, mid, or large company. Where do you need to advertise? Facebook, Instagram. Then we worry about everything else. Facebook, Instagram, WhatsApp, just starting to turn on the monetization, real opportunity there. Threads monetization, probably 2-3 years from now, that's going to come down the line, which is going to be huge. The Llama model in how valuable that's going to end up being to the AI ecosystem is going to end up producing Meta fortunes of money as well. Zuckerberg always understands how to build a gigantic business, and people look at it at first and they don't understand how they're going to make money from it. Like, people don't understand how they're going to make money from Llama. There's going to be a lot of ways Meta will make money from Llama over the long term. Is that going to be a game changer this year or next year? No, but they don't need it. They're making fortunes of money and more money than ever from Facebook, Instagram, WhatsApp. So when you think about the real AI opportunity, that's going to come down the line. Wait to see those numbers 5 years out, 10 years out, 15 years out from now. And then think about all the new products and services. Like think about Threads, right? Threads just reached a new all-time high in terms of the amount of users on that platform. Imagine the other products this company is going to produce over this next 5-10 years that we don't even see today. And they're going to be the next gold bar babies. That's what makes a really special company special. And so Meta is a stock you have to own as an investor. You choose not to own it, you choose to make a big mistake. Number 2 of these 7 stocks that you got to own is Palantir Technologies, the real AI play. A lot of people look out there and they're like, where can I play AI, right? Everybody wants to play this. And here we are in a moment in time where every company, it seems, out there is talking about AI this and AI that. Why? Because that's been the hype and excitement for the last year and a half. And everybody wants to try to be an AI company now, right? Palantir has been working on AI and talking about this stuff far before anybody was really like hyped and excited on this in the last year or two, right? They were talking about AI long before that. And I used to describe this company way before the AI hype cycle as a company at the cross sections of data and artificial intelligence. And whether you're a government agency or whether you're a business, Palantir's products are going to help you make better decisions. Better decisions. It's going to help you see the future a lot better than if you didn't have it. And if you're a business, that could help you make a lot more money. It could help you save a lot more money, right? If you're a government, that could help you save a lot of money. That could potentially help save a lot of lives, right? And so these are very, very meaningful to the world. And it kind of Palantir almost reminds me a little bit. You guys ever seen the Tom Cruise movie Minority Report? In that movie, they're using some sort of like psychic technology or something like that. I saw that movie like a long time ago as a kid, right? And basically this technology, you could kind of like see crimes that were going to basically happen, but before they actually happen. So if somebody was going to go, I don't know, rob a bank, right? You could like see that before it was actually going to transpire. It's crazy. Palantir's technology is honestly a little bit like that. So Palantir's technology, let's say you use it on a factory floor, it could be able to tell you everything like, hey man, we need to order 10 more of these parts next week, and here's why we need to do it. Looking at the data, looking at the information we all have coming in, we need to order 10 more of these, right? It could say, hey, this tube over here, this is likely going to need repair within the next month, right? It could say, hey, the speed of this guy's moving too slow for the factory line right now, right? It's going to be able to give you all these different data points the more you have Palantir in your organization to tell you all these very important things that you wouldn't be able to know if you didn't have it, or it'd be much more difficult, right? And you can go through Palantir if you really want to go down the rabbit hole in regards to Palantir. There's countless companies where their executives will go on and talk about how AIP is helping them, how Foundry is helping them, so you can get a better understanding of how all Palantir's products actually work in the real world, and let the executives of these companies tell you, here's how Palantir changed the game for our business model, which in my opinion is one of the most valuable things you could ever find. So in regards to Palantir, there's a few different products you'll hear about. AIP is one of them. This is the buzz. This is the hype. This is the attention. This is excitement right now, right? It seems like every company out there wants AIP. They all are engaging with Palantir, AIP, right? Now, there's also a debate on AIP actually being a Trojan horse to sell Palantir's other products, which are Foundry, which if you're a mid or large business, Foundry is phenomenal for you, to sell Gotham, and to potentially sell Apollo, right? And so AIP is just this Trojan horse to ultimately upgrade folks to these higher tier products. There's a debate to be made there, but AIP is going to end up making a fortune for Palantir over the coming years, directly and indirectly. But right now, this is the attention grabber for Palantir overall, and this is giving the company more attention than it's ever had in its history by far and away, and it's not even close. Now, additionally, we're at this interesting moment now where we're finding out all these AI companies are actually nothing more than just a little facade. Picture it like a fake town. That's why I have this here, right? Where it like looks like, oh, there's a town here, but then you look behind it and there's actually nothing. There's nothing behind it. That's what a lot of these AI companies we're finding out now, and that's why you're seeing a lot of these other companies that are supposed to be AI plays, AI companies, we're seeing their revenue growth decelerate. We're not seeing their revenue growth grow. With Palantir, we're seeing their revenue accelerate. The amount of customers interested in Palantir's products grow immensely. That's when you start to figure out who's an actual, real AI play versus who's just got a little, facade up here, right? Palantir, I look at that as like the Fort Knox. This is like the real deal Holyfield. And companies and government agencies are letting you know, right? Remember, these government agencies could use really whoever they want. Palantir's got the highest security clearances you could possibly imagine out there. And the government says, like, they got the best stuff, man. They got the best stuff. And so if you're a company, what are you going to go with, right? Are you going to go with what the U.S. military says is the best of the best? Or are you going to go with some other company that's like, oh, yeah, man, we got AI. Our team of 6 people, we built it, right? Like who are you going to go with in the end? No, when it comes to Palantir, we're seeing exactly the sort of growth rates you're going to want to see in a company like this. They went from $478 million revenue to 509, 525, 533, 558. These are just on the next quarter, 608, 634, 678. It's like every single quarter, you can basically count on Palantir's revenue is going to be a lot higher than it was the previous quarter. And I can tell you guys, there's not many companies in the world that every single quarter, you can basically count on them growing revenue more and more and more and more. Palantir basically never takes a step back. They never have it where it's like, oh, our revenue went down this particular quarter compared to the last quarter. No, that's not Palantir. It's more and it's more and it's more. And I don't see that changing for probably this entire decade we're in. There will be some day, maybe it's 10 years from now, 20 years from now, 50 years from now, I don't know. Someday, there's going to be a day when Palantir's revenues go down on a quarter-over-quarter basis, but it's no time soon. And that's regardless of the economy, inflation, deflation, what the Fed does, any of that. Even throughout all these cycles, more. That's Palantir. That's a special company, right? Now, here's the other thing we love about Palantir is the growth rates are accelerating for this company, which is rare to see a company's revenue growth rates accelerate more and more and more. The only time you ever see a company's growth rates continue to accelerate several quarters in a row is when a company has something special going on. They have like a new special product, like, I don't know, an iPhone, or in Palantir's case, an AIP. Look at this. For the longest time, Palantir's revenue growth rates, not revenue, the revenue growth rate was decelerating. It was going down and down and down and down for Palantir, right? But recently, we've seen a complete flip in that. They went from 12% revenue growth to about 17%, to 19%, to 20% plus, to this recent quarter, 27%. We don't know where the top is. All we know as of right now is the growth rates are accelerating more and more and more. Next quarter, do we grow 28%, 29, 30? We don't know. We just know it's getting more and more and more, which is one of the most special times you could ever invest in a business. The growth rate recently was the highest it's been since in over 2 years, right? You got to go all the way back to the March 2022 quarter, which the revenue base was a lot smaller at that time. And the law of large numbers eventually catches up to companies, right? And yet with Palantir, they're putting up their best growth rates, 678 million, compared to back here when they had these sorts of growth rates of 446. That's special. Now, additionally, the net income is starting to explode for this company. They went from $28 million in net income at this time last year to their most recent quarter, $134 million. Now, what Alex Karp says, he says there's an unrelenting wave of demand from customers for artificial intelligence systems that go beyond merely performative and academic, right? Which is basically goes back to the whole facade thing about Palantir's really Fort Knox, and these other companies are kind of like the fake facades. But listen, this cannot be overstated enough. The net income growth. And the reason being is when you talk about a company like this, starting to become what I talked about years ago, coming to fruition, right? Becoming a cash flow machine, becoming an ATM. Then you can put that money, all those profits you're making, back into the business to hire more employees and Palantir's got a very special employee force at that company, right? To then go build out the next gold babies, right? AIP is a gold baby for this company, Foundry, Gotham, Apollo. Palantir's going to be working on products, systems, solutions over this next 5-10 years. They're going to get into markets that we never saw coming. With Alex Karp leading this company, they continue to push to the forefront of these technologies and softwares that are doing things that we just, a lot of people didn't think was possible. And so Is Palantir just going to be done? No, they're going to produce us more gold babies and more gold babies. And I don't see that changing as long as Alex Karp's at this company, which Alex Karp's probably got a long runway ahead in regards to, he doesn't seem like he's done anytime soon. He seems like he's loving life and he's enjoying working and all these sorts of things, right? And so this becomes very valuable. The company can then buy back massive amounts of shares, of stock, right? If they want to do that down the road, they can continue to build the balance sheet, make more and more interest income if they want. They can buy other companies, other businesses. There's so many things you can do when you start to produce lots and lots of cash flow. Now, remember this part, unrelenting wave of demand in customers for artificial intelligence systems. Well, the proof is in the pudding, as they say. This is our latest quarter, 55% year-over-year U.S. commercial revenue growth. 83% year-over-year U.S. commercial customer count growth. So keep in mind, you're going to see more and more revenue growth in future quarters and future years because they're attracting so many customers. And some of these customers are paying very little right now, aren't paying a lot. Those customers are going to end up being, let's call it upgraded, and they'll be paying a lot in the future. Look at this, 103% triple digit year-over-year U.S. commercial remaining deal value. Very important metric. 123 U.S. commercial deals closed, 98% growth year-over-year. They have 9x'd on a 3-year basis their U.S. commercial customer count growth. You're not going to get those sorts of numbers unless you have special products in the market. And you have executives of companies telling other executives of other companies, hey man, this Palantir, this is a real deal, Holyfield, you guys got to get this, right? And then executives are always switching companies. So if you have a company that was using Palantir at another company, right? And then they switch to this other company and you're not using Palantir, they're going to be saying, hey, guys, we got to get Palantir in here. What are we doing here? That becomes incredibly valuable. And as Palantir becomes larger and larger, Palantir is going to become larger and larger without even having to put in a lot of effort toward marketing. And the reason being is the executives, because they have such a great product in the market, this executive switches to this company over here, boom, you got to use Palantir. As they get more and more in the consulting community, right? If companies love to consult with companies, not the best decision, by the way, but the companies love to pay these consulting firms. These consulting firms come in and say, you guys got a mess over here, you got a mess over here, you need to use Palantir. We had this company use Palantir, and it helped them produce blah, blah, blah. 50% improvement in efficiency in this segment over here. That is huge for Palantir. Now, additionally, the company sits on $4 billion in cash equivalents, U.S. Treasury securities, and no debt. How many companies can really say that? They have multi-billion dollars in no debt. That's incredible, right? Obviously, we see the free cash flow just flying to the moon. Now, this does not come as a surprise that I own a lot of Palantir shares. I got 5,555 shares in the public count, up 259% on those. There's another stock that I don't plan on selling this one anytime soon. I own Palantir and other portfolios as well. This is just a very special company. And with very special companies, you hold those babies because they're gold babies that are going to produce you more gold babies, okay? Very, very valuable. Now, here today, pin comment down there. I'm going to put an application link to if you want to apply to join my private group, my private stock group, wealth group, get access to 1000xstocks.com. You can go ahead and do that. On 1000x now, we have how to decode a balance sheet. If you need to learn exactly how to judge balance sheets in depth, income statements, cash flows, we have all that in there. How to perform SWOT analysis, strong moat versus weak moat, how to value dividend stocks, how to value growth stocks. Extremely important for a lot of you guys watching this video. You got to understand how to really value a growth stock. Dividend investing 101, portfolio management, all those sorts of things. So if you want access to all this stuff, which is going to help take you to a much higher level than where you're at today, click the pin comment down there, pause this video. We're about to get onto these other stocks. Pause the video, click that, fill in an application. We'll see if we can get you access to my private group, private stock group, wealth group, and 1000xstocks.com maybe next week, okay? Alrighty, guys. Number 3 of 7 here is Amazon. Every investor's gotta own Amazon stock. This is a must own. By the way, it's random. I went on Google to search something and this popped up. Check out Jeff Bezos' new $80 million private jet. Jeff Bezos is no longer the CEO of the company, but Andy Jassy's running this show very, very well. Now, you understand with Amazon, this is a company in which they're way more than just that app or that website you type in to order stuff that comes to your house, okay? That's obviously a huge component of their business, but they're also devices and services. They're also Amazon Web Services, which is arguably the most important part of Amazon's business. They're delivery and logistics. They're one of the biggest delivery and logistics companies in the world. People don't think of it like that. But when you buy Amazon, you're basically buying like another UPS or a FedEx, right? Along with the backbone of companies in the internet, along with the biggest e-commerce platform out there, right? Incredible. Their entertainment. When you think about Prime Video, when you think about now they've gotten into live sports, right? Amazon Business, Amazon Luna. They also own Audible, Diapers.com. They also own Twitch, Zappos, Whole Foods. So when I look at Amazon, this is the definition of Amazon. They're a gold bar that just keeps producing more and more gold bars. And it's unbelievable, right? And when you think, Amazon started as one gold bar. It was a bookstore, an online bookstore. And to think what this company has produced you for the past 25 years is historic. It is absolutely historic. It's the definition of what I'm talking about in this video, of these gold bars producing more and more gold bars. That's Amazon. That's special. Now, this is looking at 1000xstocks.com. This is our valuation tool where you can adjust revenue growth rates, net income growth rates to however you want. You can switch all these numbers. I usually like to run my numbers with a consistent kind of what I'm thinking the company is going to likely grow over the coming years, right? So I'll usually run a consistent number, but you could put like 7 and 12 here and then like 5 and 18 or whatever, right? And what I want to draw your attention to here is I have them growing a very lame for Amazon 12% a year over the coming years for revenue. Now, keep in mind, Amazon's grown far faster than 12% revenue. So this would be kind of disappointing. Now, this would put the company over $1 trillion in revenue in 2028, which could be the first company in history, human history, to reach $1 trillion plus in revenue, which I think is very possible. Another thing I want to draw your attention to here is I have net income growth of 15%. They're growing net income way faster than 15%. So this is a very sleepy number that I think they're going to probably beat that considerably over the coming years. But I wanted to go very conservative with my numbers just to illustrate the point of how much upside Amazon has over the coming years. Net income margins of 8%, which is not a high number here. Now, Amazon's a company that, if you look at its history, it usually trades way over a 50 PE. But I want to go ahead and run a little more conservative, 35 to 50, right? Which is still very conservative considering if you're growing revenue double digits and net income double digits, right? So this would put the stock in 2028 at between about $286 and about $409, which on the low end would be a CAGR of about 13%. On the high end, there'd be a CAGR, a compounded annual growth rate of about 23%, which would be amazing. Now, keep in mind, this is my conservative numbers, okay? There's a high probability Amazon will come in and they will beat a 12% average revenue growth and a 15% net income growth, okay? That's very beatable numbers. And net income margin, I think there's a real possibility they get this baby to 10% by 2028. But I wanted to run conservative numbers just to illustrate my point of how much upside Amazon really has over this next, we can call it 3 or 4 years. Now, Amazon's a very special company because this is one of very few companies that's built for all times. You look out there, there's certain stocks that if the economy is really good, those stocks are going to perform tremendous. Their business models are special, right? For a great economy. There's certain companies that are positioned very well for like a recession situation, like a company like, I don't know, a Coca-Cola comes to mind. Like they're going to still put up their numbers even in a recession. Amazon, this is a company built for all times. And when you think about all the different situations Amazon had to go through, the tech bubble bursting of 2000, the great financial crisis of 2008, the 2020 Rona situation, right? Which was crazy and dramatic for them because people were forced to be home, which was kind of good for Amazon, but then they had to build out a ridiculous amount of warehouses because their demand went to the moon. It was incredible, right? And then 2022, which was a consumer goods recession because people said, I bought plenty of stuff in 2020, 2021. I don't need to buy stuff. I want to go on trips. I want to go on vacations, which was very negative for Amazon. And they got hit with inflation, which hurt them very bad with their delivery and logistics side. And yet they made it through just fine. Companies got really tight on AWS budgets, and they still made it through the other side. And they remained in a good place, right? And they came, and the thing you got to understand about Amazon, every one of these crises that the company has to go through, they always emerge stronger coming out over that next year or two than when they went as a company going in. That's a very special company. Because I can tell you, when a lot of companies are hit with hard times, they come out in a weakened state. And by the time you see that company emerging, you're like, ooh, that's a lot weaker company than when they went in. Amazon is one of the very few companies that you can say within a year or two coming out of a situation, like, that's a stronger company than when they went in, coming in. They got a better expense ratio, those sorts of things. It's incredible. Now, it doesn't come as a surprise. Amazon's a big position for me, $186,000 in the public count. We're up $73,000 on this. It's a very small amount from what will be up in the future. Amazon and Meta, listen, man, these are steak and chicken. I always tell you guys, there's certain stocks that you got to build a portfolio around. You need your steak and chicken. They're the entree or your meal, and then you put the side dishes around it. That's Meta. That's Amazon. Special companies that you have to own for this next 10, 20 years. They're gold babies that will produce more. Number 4 of 7 stocks up here is Shopify. Every investor out there should own Shopify stock. Abso-dang-lutely is this one you got to own. So, if I could only show you one thing about Shopify, this would be the thing I would show you. If I was only allowed to show you one thing, okay? So, this shows you how many people buy from Shopify stores over time. If we go back to 2016, they hit around 100 million Shopify buyers. Now, by 2018, they eclipsed 200 million Shopify buyers. By 2019, they hit around 300 million Shopify buyers, right? And then by 2022, there are over 500 million Shopify buyers. This past year, a little under 700 million. In 2024, they're going to be well over 700 million Shopify buyers. If there was only one thing I could show you, that would be the thing right there. Absolutely incredible. Now, in regards to Shopify, their earnings per share is flying up. It's not going to stop, really. Shopify's business model, I think, is one of the best business models in the world for producing exceptional margins and profitability over the long term. And the reason being, it's going to be a very asset-light business as this business continues to build out. There was a moment they looked like they wanted to take it asset-heavy and kind of do an Amazon thing, but they kind of reversed from that, and they're like, let's focus on our real strengths, which is being asset-light, which is really on the software side, and making the purchasing much simpler. Doing anything through the digital way, which the digital way is the profitable way, right? Which is why AWS is what really contributes to the profitability of Amazon, this digital side, right? Now, look at this. This company is one of the very few companies you can pretty much expect them growing revenues 20% a year plus for years and years to go in the future. That's very special. Now, if we look at Shopify's revenue, check this out. Maybe if there was only one thing I could show you for Shopify, maybe it would be this. Their revenue went from, in 2017, under $700 million of revenue, to 2023, this past year, they did over $7 billion, over a 10x in their revenue in that amount of time. 2024, we'll see. It's going to be a big number. It could be $9 to $10 billion somewhere by the end of this year. Incredible numbers for this company. Now, with Shopify, they obviously make a lot of money from their subscriptions, which people sign up for the Shopify stores, and those stores could be very cheap. They could, some customers, some of the bigger dogs, they pay thousands of dollars a month to Shopify, if not tens of thousands of dollars a month to Shopify in subscriptions. Transaction fees is a way Shopify makes money. Shopify Pay is a way Shopify makes money, and there's a lot more babies coming in regards to this one. There's so many different avenues Shopify is going to be able to go over this next 5, 10, 15 years to produce more and more gold bars to make this company more and more profitable and more ways to make money. So Shopify is the number 3 biggest position in my Patreon portfolio. So if you follow me on Patreon, you get to see the stocks I'm buying and selling each week in that particular portfolio. And there's a reason it's the number 3 stock. So far, we're up 23% on the stock because it's a relatively new position, right? And I don't see that one, I need to continue to build Shopify. I need to continue to build that because I'm going to look back someday and be like, I remember buying Shopify in the 60s or the 70s or the 50s, and I'm just going to look back and be like, it was so cheap back then. And that's what's going to happen. The next stock up here, number 5 of these 7 stocks that every investor must own. I gave you a hint. I gave you a little hint on this one. It is Tesla. Tesla, my Tesla. Now, people have a very false belief of Tesla stock. They look at Tesla stock as a risky stock to own. They say it's a risky stock, right? And I understand why they say it. It goes up a lot, it goes down a lot, it's all over the place, it's got a huge beta, it's all over the place, right? I look at Tesla stock, and I truly believe it's more risky to not own Tesla than to own Tesla. And this is why I say Berkshire Hathaway, given how many energy companies are invested into and other companies over the years, I always said it would be smarter, and I've said this for probably 5-10 years now, it would be much more intelligent for Warren Buffett and the team over there to load up on Tesla stock as a hedge, because it's more risky to not own Tesla stock than to own Tesla stock. This is why Tesla remains a key position for me overall. Tesla produces almost as many babies as its CEO Elon Musk does. All right, some of you guys, you might get that joke. Some of you guys might not be on the up and up in regards to that. But it's incredible how many babies Tesla produces. If we go back, let's say 14, 15 years ago, this is all Tesla had. That was their business model. They sold these things called Tesla Roadsters. This was it 14, 15 years ago. That was it. And it's hard to believe because now you look at this company and this is what they sell. The Model S, the Model X, the Model 3, the Model Y, Cybertruck, the Semi, self-driving software where the car drives itself, worldwide charging network they have at this company. They have a solar business. They have an energy storage business that's taking off like a rocket ship right now. They have a services side of their business that's taking off like a rocket ship right now. We could call it a SpaceX type rocket ship. It's taking off. It's incredible, right? And in the future here, and we're not talking about the 50 years from now, distant future. We're talking about over the next few years. They're going to have a robo-taxi fleet in the market. Optimus, the Model 2, which is going to be their, I would say, worldwide mass market vehicle, and the vehicle of the robo-taxi fleets of the future. And imagine how many products, services you're going to see this company get into over the next 5-10 years that they're not even in today. We're going to be, oh my gosh, they made money from that. Oh my gosh, they made money from that. They could, if Tesla's the biggest player in the robo-taxi fleet, who's to say they're not going to become a massive advertising giant over the next 10 years? Who's to say that? Imagine every robo-taxi, I would say every robo-taxi. Imagine they got a 50% market share around the world of the robo-taxi fleet 10, 15 years from now. Imagine the opportunity for advertisements, right? Inside the Tesla app. Imagine food delivery through robo-taxi vehicles. Like, there's so many capabilities over this next 10, 15, 20 years with Tesla. It's unbelievable. And so what you're seeing today, just what you've seen over the past 14, 15 years is incredible. But I'm telling you, what you're going to see over the next 14 to 15 years is going to blow your mind because there's going to be so many new opportunities, so many new gold babies here that you never saw coming. Even somebody like myself that's bullish on the stock, I'm not going to see coming until it's right there. And I'm going to be like, whoa, I didn't even realize Tesla was going to get into this. Like, this ended up being huge for the company, right? Now, in regards to Tesla, this is a stock that can go through these short-term time periods when everybody doubts the company, right? In those sorts of things. And as they say in the market, when in doubt, zoom out. Look at this company. 2012, they did $400 million, a little over $400 million of revenue in 2012. This past year, 2023, they did almost $97 billion of revenue. That's one of the most historic jumps in revenue, maybe in human history. To go from 400 million to nearly 100 billion in a little over a decade, who else is doing that? I can't really think of anybody who did that. That's incredible numbers, right? And imagine where Tesla's revenue is going to be, let's say 10 years from now. Like, are we talking about a company that's doing $500 billion a year in revenue? Or are we talking about a company that's doing $1 trillion of revenue? I think that's a fair debate, right? Now, in regards to Tesla's team, it's a very special team over there, right? Obviously, you got arguably the best business person in history running the company, which I think if we were to have a very fair argument about who's the greatest business people in history, Elon's got to be up there. I would put Steve Jobs up there as well as one of the best business people ever when you look at his success at Apple, then going away from Apple, starting Next Computer, coming back to Apple, changing the complete game in regards to mobile devices and putting the company in the best position possible. And then his purchase of Pixar, I'd definitely look at him as up there. But Elon, obviously what he did with, what ended up really becoming PayPal over time back in the day, SpaceX, Tesla, Neuralink, everything they got going on there, it's a strong argument you can make that he's the greatest ever or one of the greatest ever, right? And then you look at the overall team. I've met a lot of these folks over the years through the private stock group, right? Some of these folks are so brilliant, it's not even funny. And when I say, I'm not talking about like executive level, I'm talking about like the engineers at Tesla. They're unbelievable. And so they're just going to keep producing more and more gold babies. So Tesla's one of the stocks, you own it, you screw the short-term drama. It's always going to be short-term drama. Elon did this, Elon did that. Tesla did this, Tesla did that. Oh my gosh, everybody on the news is talking about Tesla. It flipped over on the freeway. We've never seen a car flip over in the history. By the way, Tesla's rarely flip, but Tesla had a fire. Oh, we've never seen a vehicle catch on fire before. There's always just so much BS in regards to Tesla to distract from what's really going on over the long term, which is just very, very special. And so I'm up 700% on the stock. I have no ambition to sell this 1,700 share batch of Tesla shares. It's just hold it. It's going to go through these drama periods. The stock's going to go all around. But when Tesla makes its move to the upside, if you miss that upside move, you miss it all. Because when it goes, it goes. And it ain't coming back, baby. Number 67 stocks up here that investors must own is SoFi Technologies. So SoFi I really look at now, and the more I'm viewing this company, the more I'm realizing this is a must own in a portfolio for folks. It is the future of banking. The way they position this company, and Anthony Noto's really positioned this company, it's the future of banking. For what everybody was in the past, this is the future of banking. When I really think about the future generations and how they want to be online first, how they want their products and services laid out in a simple way, and be able to understand how to utilize these things, SoFi's really got it. And so I think they are the future of banking. And it's not just that I think that. The numbers are showing it. Every single quarter, this company attracts a massive amount of new members. They're taking market share on the market. And they're doing this through all these different gold babies. It's not just they have one business line and that's it. I mean, they're doing everything for you, from student loans to personal loans to banking to, which banking in itself is a ton of different golden babies in there, to investing, to credit cards, right? Mortgage loans, insurance. It's unbelievable. Now, look at the revenue of this company. Now, keep in mind, their revenue was very lame from 2019 to 2020, and that's because the government put on the student loan pause there that really hurt their numbers for a couple of years there, because that was a significant part of their business. But even despite that, they went from $700 million of revenue in 2019 to this year nearly $3 billion, right? From $700 million of revenue to nearly $3 billion of revenue. That's an incredible growth rate over a few years, and that's with the government kind of screwing them over on student loans for several years, right? Now, additionally, who wants to own a bank that doesn't make money, right? We all want to own a bank that makes money, and guess what? SoFi's starting to make money. So if we look here, this company, if we went back to these 3 quarters last year, right? The June quarter, the March quarter, the December quarter. If you total those up, that was a $132 million loss. If you total it up, the previous year on those 3 quarters, it was over $300 million loss back in 2022. Now you're $123 million in the plus on those 3 quarters. So this is very exciting. That SoFi is now a real net income machine, because that's obviously very different than the company's been, right? Now, if we think about traditional banking, the branch network was phenomenal for a long time. And this is about to go, in my opinion, from a positive to a huge negative very rapidly over this next decade, essentially. So when we think about the branch network of all these big banks, Chase and Wells Fargo, Bank of America, all these big dogs, right? That branch network was always phenomenal for previous generations, because a lot of the previous generations, they like to go to the actual bank, right? And they do their banking inside an actual bank. Now, the younger generations, we don't care to actually go in the bank. The only time we would ever go in a bank is if we're forced to go in a bank, because we have to do something literally in that bank or something. But for almost all of us, do we ever go to the bank? I mean, even my banker that I personally deal with, I don't even usually go to him. He can come to my house and we can do whatever we got to do at my house, right? That's really the future of banking. And the future of banking is being able to do everything on your phone that you need to do. You don't have to go. Now, all these traditional banks, they have these huge branch networks, which is great for the older generations, because those folks love to go to the bank. But I'm telling you, the newer generations don't care. And so now these big banks are stuck they're stuck in a bad situation, because they could shut down their branch network, and guess what that's going to do? Their current customer base is going to flip out, because the lady that's 65 years old has been going to the bank for her whole life. You can't just shut down that bank on her. She's going to flip. She's going to go crazy, okay? You can't do that. So you got to keep the banks open for a lot of the older generation, right? And meanwhile, SoFi is able to be asset light, because they're attracting more of the millennial generation, the Gen Z, right? Gen Alpha, as that group will age up, they'll attract those folks as well, right? I think they're the most well-positioned to attract those folks. And so what you'll see is SoFi be asset light. These other ones asset heavy, And that's going to hold those big banks back over this next 10, 20 years, while SoFi is just going to emerge as kind of the best position in there with the best technology. And then they have their Galileo platform as well. It's absolutely phenomenal, right? So that's going to be very interesting. Now, SoFi, I have 3,100 shares of SoFi in this portfolio. I do have some shares in another portfolio or two as well. I have to watch sizing on SoFi, though. It is a bank. At the end of the day, it's a bank. And these do come with risk. And so I can't go crazy with it. But it is a stock I view as like, you have to own this one because it is a future banking. So to not own it is just crazy. Like it's one of those stocks you got to have positioned a little bit. You don't have to build it into a big position. Like I feel comfortable. If I got 3,000 plus shares of stock, like I'm good, right? Or 5,000 shares, like I'm good. I don't need to own 50,000 shares of stock. I'm good. Next stock up here, 7 of 7 that's a must own is PayPal. Another financial, but it's a very different financial than something like a SoFi because PayPal is not really a bank. They do a lot of fintechy type stuff, right? No, PayPal, you got to understand, they have 3 really large, very important platforms. They have PayPal, which is their big dog. They have Venmo, which is insanely big in the United States of America specific, right? And then they have Braintree, which is really the payment processing of a ton of companies on the backside, right? Now, these are assets that have been seen as all underutilized. So everybody's viewed, at least from Wall Street's perspective, PayPal, Venmo, and Braintree as all being absolutely exceptional places to build a business, but they view it as the previous CEO was not like executing nearly high enough. So that's where comes Alex Chris. He comes in, very important executive in Intuit. Intuit's one of the most loved great stocks in the stock market. And Alex Chris comes in here and he's doing pretty dang good right off the bat, right? Now, even despite PayPal not utilizing those assets nearly as well as they could have, PayPal, Venmo, and Braintree, the company's still been Mr. Consistent, which speaks volumes about how great PayPal's business model is. That you have 3 core businesses that have all been, at least in people's opinion, underutilized, underleveraged, and yet you still put up these sorts of growth rates. $10 billion of revenue, 13, 15, 17, 21, $25 billion of revenue, 27, nearly 30. This year is going to be way, way, way over $30 billion plus in revenue, right? And that's with an underutilization of those different platforms. Incredible to think about that, right? Now, if we look at the latest quarter in regards to PayPal, they had huge earnings per share beat. They also beat on revenue by $64 million, so love to see that. In regards to PayPal, the risk reward is just too attractive to not take advantage of, just to be quite frank. The forward P on the stock somewhere in the 14 to 16 range, like that risk reward profile is crazy. Like you can't avoid a stock like this, right? Now, looking at if we want to run kind of numbers and projections on 1000X here, I ran them with a 7% revenue growth rate, which is under where they've been growing, right? And I think there's a decent probability they could beat that over the coming years because Alex Chris innovation going on there. And I had them doing 12% net income growth, which is horribly slow compared to how fast they've been growing net income recently. So with 7% revenue growth and 12% net income growth at a PE ratio of 20 to 30, which is fair for the stock, this would put the stock at 104 to 156 in 2026, which would be a compounded annual growth rate on the low side of 20% and on the high side 47%, right? In 2028, even with these very lame numbers I have here, which is not good, 7% revenue growth for PayPal over the next many years is not going to be good. I don't think Alex Chris would be satisfied with that, just to be quite frank. But this would put in 2028 a share price of 130 to 195, which would be a CAGR on the low side of 16% and on the high side 28%, with disappointing numbers, right? And that's why PayPal has to be a big position for me, and that's why it is a big position for me. 3,105 shares in the public count, and I've had thoughts about, maybe I'll sell some shares. I've had thoughts, but the more and more I see Alex Chris innovating here, the more I see this team going, the numbers coming in, the more I'm like, I can't really cash this one right now because it's actually just too valuable, and it is seen as a must-own stock, and the CAGR looks pretty darn attractive over the coming years. Okay, guys? Already appreciate you joining me as always. Thank you so much for being here. I hope you guys really enjoyed that. Those are 7 must-own stocks for all investors out there. If you're looking to apply, join a private stock group, private wealth group, get access to 1000xstocks.com. Click the pinned comment down there. You can fill out an application. We'll see if we can get you access to all that maybe next week and take your game up to becoming a much, much better investor than where you're at here today. Much love and have a great day.